Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, February 7th. It's 6:40 as I'm starting the video. And as always, run the video at 1.5x. I think you'll find that the best speed on these videos. And you can always stop and hesitate, take a note, do whatever you want, but I think that's the right speed. Also, want to wish my dad a happy birthday today. We had a nice dinner over the weekend to celebrate, so had a good time there. So let's dive into the charts. Lots to talk about. Taking a quick look at equities, mostly red across the board, but not terrible. Equities down about 0.25%. Bitcoin's having a nice morning, up 4.5%. There's been a good correlation lately between Bitcoin and the NASDAQ, so that might be a leading indicator for you today. Oil's down about 1%. Copper, the same, down 1%. Gold's up 0.3. The VIX is hovering around 23. I'm not going to show the chart this morning, but keep that on your dashboard. Look for a trend either towards 25 or towards 20, and that'll give you an intraday read on what's happening both in vol and help give you a heads up on direction on the market. Really nothing happening today on the macro front. And then on the blog you'll find the full earnings calendar. I picked out a couple here this morning. Before the Bell, Hasbro and Tyson Foods. Tyson might be interesting in the food complex. I would expect them to report that, all their input costs are going higher with the grains, the labor, all that kind of stuff. And then you've got, in the afternoon, Chegg and Take-Two Interactive. So, in the gaming space. So let's get into it and see what we got set up for this week. Starting with the dollar, we had a bull trap into not last week, but the closing the week before. We had a bull trap, and it's been down ever since. So now, as long as we're below this 95.75 area, I think you can look for a move back down here at this prior low at 94.50. And just remember the linkage between the dollar and emerging markets. We talked about on Friday, Brazil. If the dollar's falling, that's going to help Brazil. Okay, so that should be a tailwind for that, and also other emerging market economies. So I'm sure the Fed is happy with that move. Here, probably not so much. The last thing they want to see is a dollar that's running. So it has backed off and is now back down below all this trading. So now all that will act as resistance on the way back up. And then, of course, we've got the 200 coming in here at 94.22. That'll be an important level going forward. If this 94.50 breaks and then the 200 breaks, then the dollar will be on the wrong side of the whole chart, and you could probably anticipate lower prices. Quick look at the 10-year, rocketing up to this prior resistance level at 1.93%. If you get a pop above that, that's not just a one-day wonder, but a pop up and then a consolidation, I think you're going to see a two handle before too long. So keep that in mind. And then over on the TLT chart, if rates are going up, TLT is going down, and now we've come down to the top of this prior trading range. Let's call it 139. A break below would open up the midpoint of this range down at 136, and then break below the midpoint will bring it down to the bottom of this box at 134. So if you're into trading bonds, I think you use this 139 as your pivot for the near term. I'm not going to go through all of the oscillators. Here's the NASDAQ over 50, over the 50 DMA. And you can see that even in this bounce, we have not really recovered very much. We're only trading down here at 18.5%. So what that's saying is only 18.5% of stocks in the NASDAQ are above their 50. And you can see historically, that's pretty low. Now, what I will do is on the blog this morning, post the NIMO and NAMO oscillators, and I can tell you that they're more or less, they're heading down, but the NAMO is at -10 and the NIMO is at -20. So not terribly predictive, but they have made the turn, and that leaves me a little bit cautious here going forward. I think we're in a situation where the market is finely tuned, as it were. Another way of putting that is in a precarious technical posture, right on the edge. We had the move down. We traded this durable bottom, this tradable bottom here, and we got the run up, and then we had the Facebook candle, and then we had the recovery. So we've got a gap above, actually a couple of them that have yet to fill, but we are wrestling with this bottom of the range 450, and that's a level that we've highlighted for weeks, really, going all the way back. You can see how important that line is. Support zone here was a little bit of resistance here, etc. So I really think you can use 450 as a general pivot on any of your SPY trading. Just keep in mind that on a move above, a couple of things. We've got a gap entry here at 452.5. Then we've got downtrend resistance here in brown, and we've got the 50 EMA coming right in at 456. I think if you got that move, it would be very objective to try a short there against the top of the gap, against downtrend resistance, and against the 50. I mean, that's a triple layer of defense and overhead resistance. And you can see it better right here, where you've got a confluence right here at 456, right in that area where you've got the 50, the downtrend line, and the top of the gap. Now, we break out from there, I would say get long. I've got a bearish bias below this line and a bullish bias above, because it wouldn't be out of the realm of possibility to break out here and then make a quick run up to fill this other gap up to, 465. So keep those levels in mind. But as it stands now, we're below 450, and I think you got to respect that. We've had a little turbulence lately with the Facebook down and the Amazon up, created a lot of whipsaw, and with all the companies' earnings coming out, I think you may end up seeing. I think the big ones are over. I mean, we've had the rug pull on Netflix, we had the rug pull on Facebook, we had the moonshot with Google, we had the moonshot with Amazon. Microsoft was not a whole lot. So I think the big ones are over, but we still have an elevated VIX, and I think folks are still real nervous about Fed policy rate going forward, and also watching that 10-year interest take out that 193 and then run up to 2%. Here's the 30-minute chart. I've got a little trend line here that could act as support. And here you've got the two overhead gaps that we just talked about a minute ago. Qs. We've been saying all along that 360 is your near-term pivot. I want to stick with that. We do have a $10 gap above that needs to get filled, starting at about call it 362. It may be a little bit under that, but we're at the 38% retracement level now. We could go back up to this 50% level if there's some juice this morning, but the massive level is 380, and that corresponds to 350 on the SPY chart. Why? Because this was the $20 range, $20 trading range that we dropped out of a couple weeks ago. And so now all of this is going to be technical resistance at 380. So if you got a breakout above the 200 here at 363, I think you could be long against that, and then hope for a gap fill, hope for a breakout, hope for a gap fill here, and then if you got to 380, I would certainly be inclined to flip short, because I think that's a very objective level. You would have accomplished two big technical check marks in filling these unfilled gaps, and then all this overhead resistance. And so you could be getting short against 380 with a stop just above. And hey, if they take it out, remember what we say: if you break into an old trading range, then the target is the top of the box, which would be 400. So if the Qs get all bullish all of a sudden, break above the 200, then break above 380, I would certainly be getting long there. Take your paper cut, because you'll be stopped out on your short, and then go long if price comes back in to this trading range here. I don't think it's going to do it. You've got some downtrend resistance. You've got the 50-day overhead right here. So there's quite a bit of work to do. I don't want to give you the impression that I thought it was going to get to 380. I don't think it does. But you've got to keep both bullish and bearish scenarios kind of in your narrative, so you don't get tunnel vision on a bearish outcome, because who knows where they might take it. So here today, I think you can use the bottom of your gap here as your pivot point, and as long as you're below that, you can have a bearish bias. But if you break inside, you'll have to decide, am I going to get long for a gap fill, or am I going to see if this gets rejected here at 365, where the downtrend line comes in, or if we're going to play for that gap fill. Kind of a tricky setup. I'm not going to lie to you. Just keep in mind all these levels. You got the 200 at 363, then you've got downtrend resistance, and then the top of the gap. And then here on the 30-minute chart, you can just see where the gap comes in a little bit cleaner. IWM. still remains the most bearish of the three. Why? You've got a full bearish stack on the EMAs. You got the 200, 50 below the 200, 20 below the 50, 8 below the 20, and that's where price is. So I think unless and until price on the daily chart can get above 204, where it ran into trouble on quite a number of days here, I think it's going to be a tough time advancing. Now, if you want to, fine tune it a little bit, you've got a nice downtrend line here on the 2-hour charts. And if you got a close above 200, that would be a breakout. And I think your first level will be up here towards 204, where it has run into trouble in the past. Actually, looks like about 203.60. And then you can see if the levels can break above. But as it stands now, I'd favor this going lower. And if you go out to, like I said, larger time frames, I think you have to be bearish on IWM until it can, prove otherwise. And up until this point, even with these, impulsive rally off of this divergent low, you're still getting rejected along this line at 203, even when it bounced up again, rejected on the downtrend line. So you can tell that downtrend line has quite a bit of significance on the chart. Let's get into FATMAAN. At this point, I'd like to welcome any new visitors to the YouTube channel. I really appreciate you being here. I work hard to give you objective levels that you can trade and execute around. And I think if you can get to the point after watching me for a while that you can trust the levels, I put a lot of pride in that work. And I'd like to think they're usually right on the money. And then that frees up your bandwidth to focus exclusively on execution. Obviously, I can't do the trades for you, but if I can take 50% of the potential mistakes out of it for you, I think that's a huge bonus. So if you appreciate that kind of analysis, please hit the subscribe button, the alarm bell, the post notification content, and give me a thumbs up. And for sure, if there's something that you want me to cover off, please leave me a note or a comment. I'd appreciate it greatly, and I'll certainly work in what you want to see into a upcoming video. I'd love to do that for you. And of course, longtime listeners, please give me a thumbs up and a positive comment. It helps me on YouTube. And pass the link along to others in your trading circles or other groups you're involved with. And that will help me a lot. So thank you very much. So getting into Facebook, we've got this set up as a bracket trade. The big gap down. Now we had the bracket here, and now price dropped below on Friday, but then rallied back to the bottom of the bracket. You'll need to probably blow this up a little closer, but the way it goes is if you can get back into the gap, you got a lot of running room to the upside. But on something that drops down this significantly, I would think, at least for a while, it's either going to drift lower and consolidate in a fairly narrow range, say between 235 or 230 and 245. And, as people get out and get in, have it consolidate here for a while. And then depending on what the market does, if it rolls over, it'll break below. If the market gets bullish, you'll get a break into the gap. I don't think Facebook is going to act totally independent at this time. I think it's either going to go into consolidation or break the way the market breaks. Apple, nice impulsive rally, came up to 176, got rejected, and now we're in this zone here between 172 and 173.50. I think this morning you can be long on a breakout above 173.50, and if you break out and then come back and drop back below 173.50, I think that could be your short, with your first objective 172 and then your second objective 170. And I think from the prior price action, you know that these are good zones. We had a flag here right under resistance, and then it popped through. During this time frame here, we had a lot of sideways action within this narrow band between 172 and 173.50. And then even when we broke back above, number one, it stopped right on our line here at 176. But we also had reach back candles that came back towards 173.50. So we've got a lot of evidence that these lines are in the right places. So that should give you confidence trading around them this week at least. Tesla. We moved outside of the down channel. We found a lot of resistance here at 935. A lot of rejections. It backed off, made another run at it, backed off, came back down here, and I'm going to call this gap filled. You can see that we got a reach back candle like all the way down to, what is that? 880. I think that filled the gap, and then we've come back up to 935 where price had trouble on Friday. So I think pretty clearly it's 935. If you get a breakout above 935, you can take it long and look for 970 or higher. 1,000 is your big level because of all this trading action back here. So above 935, I'd say 970 and then 1,000. If you drop below and then lose this 910 area, I think you come all the way back into 880 and probably back into this 860 area if it can't break out from there. Microsoft. Couple locations on the chart you need to be aware of. 305 was the big breakout on the daily. So that's a major pivot point. You've got some overhead resistance here at 310 where we've got a $3 gap. And then back below, I think if you lose 302.50, you're going to open a door to, at a minimum, go to 300, but then probably come back to 295 to test this low here. And then you can see there's a big gap below. So I think the overall posture for Microsoft is bearish. Why? We had this big downtrend. We broke out, but we weren't able to hold trend. So now we're back below this trend, and we're below key resistance. So I think everything is time frame dependent. If you're trying to fine tune it today, just trade off the levels that I just spoke of, 305, 302.50, and 310. But on a longer term perspective, if you get a rally back into, say, 318, 320, that stalls, I'd be putting on a short there because you got a ton of overhead resistance at that level, and I have my doubts whether it can really break through. So last week we had this big reversal on Amazon earnings from Thursday night. Jumped up here, made a little run, did not fill this gap all the way, then pulled back into the close. I would have the top of this gap marked at 31.12. Any kind of move back into that gap is going to be bearish, and I would expect, a move down. If it can come back test it, and hold, then you've got a nice long against like 3,100 for a move back up to not only fill this gap, but get up into this trading zone here right around 33.15, I think is the number. So you can put that on your charts. Google. Impulsive move up. Remember, the prior high was 3,000. I can actually show you that here. I think it's an important level. We had highs here, 3,000, put in a little double top way back when. Now, on the gap up, price was not able to hold that. So you see we dropped back down into the range, and now we're back down at 28.65. So I think as long as we stay below this 29.10 area, the bottom of this box, I think you got to lean bearish until this level is recaptured. And then if that happens, you're looking for 30.25, but price should not have come back below 3,000. And now we're actually back in, more or less back into the trading range. So I think you can stay short against 28.75 this morning, which was the close from Friday, and look for this little bear flag move to fill the gap. That would be my guess. Netflix, big gap down. We had Ackman buying. We had Reed Hastings buying. Had a nice move up. And then found a problem at the halfway point of the gap. And so now we're back below 410. We're caught in between this lower gap and the upper gap. On the downside, if this trend line breaks and moves down below 400, I think you can be short for a move down towards 385. On the high side, you get a break back above 410. You can be long against 410 and simply hope for a move back to 460. And, these don't look like a lot, but that was $50. That was a great trade. I know a lot of guys were in that. I was in that. Didn't capture the whole 50 because what I was doing was, rolling higher all along this way instead of just, holding one position. Because, if you're in weekly options, you know how fast they move, and, you get consolidation activity or little baby pullbacks. It hurts a lot. So what I was doing is, when it looked like consolidations were happening, I was taking profits and then moving a strike out of the money, and then, it advanced. So keep rinsing and repeating. Unfortunately, I didn't do that on the downside. So this was just, I got out and then just let it do whatever it was going to do. But I'm going to be watching 410 here this morning pretty darn closely to try to gauge not only market direction, but if Netflix can make a positive move back up to the midpoint of the gap up towards 460. Let's look at semis. Similar looking chart to a lot of the other ones. Ramp up, stalled here at 283, had a little gap down. Now this looks like a little bear flag. Could be the part of a V recovery. I think the way you trade it is just use 273 as your pivot right here. A break above, you can be long and look for a move back up towards 280. If it rolls over, you can either try a short right at the beginning, or wait for 270 to break. And I think if 270 breaks, that'll make this look like a bear flag breakdown, and then I would expect a move down towards 260, 257.50, somewhere in that range. And taking a quick look at ARC, I'm going to keep my eye on this. I do want to get back in short on some of these ARC names, but I want to get a good trade location so I don't have to micromanage it. So here we've got ARC, F, the fintech. I've got a downtrend line. I'd love to see ARC come back in to the downtrend line and stall. I would be interested in putting on a short there with a stop just above. Here on genomics, a move back into 51 or even 53 would be great as a location. And certainly if it got into 58, where all this consolidation happened, breakdown, back test, I'd be putting on a short around 58 for sure. This ARK-K, driven a lot by Tesla. It's their biggest holding. Got a downtrend line, got a consolidation range. I would be looking to short somewhere, 65 or 83, I'm sorry, around 83 or 90. Now, on Friday, I sent you out the prior lows. So if we never make it that high and you get a break below the prior low, that's going to open more floodgates. And so on these charts, I've got all the lows alarmed just in case the rally fizzles and these roll over. Then I want to get short against the prior low and see if we don't get an extended move down. This is the ARC W Web one. And you can see up here, actually on all of these, I just didn't point it out, how the momentum profile is just falling away. And on the RSI, we got oversold and they put in a little bounce. So what you'd like to see on RSI is come up like to 50 and then roll over again. So we'll have to see on how that all works out. But I think all those high-tech bubble names, Ponzi names, SaaSware names, all that stuff that are still trading at super high valuations, even though they've been cut in half. I think after it's all said and done, these guys could be easily cut in half again and still have ridiculous valuations, right? And just think about Facebook for a moment. I mean, ultra mega cap, right? People were totally off sides. I mean, we're not talking like a little biotech that didn't meet its primary endpoint. We're talking about Facebook. I mean, the bottom drops out to the extent it was the largest single day loss in terms of market cap in the history of the stock market. And that's just an indication of how wrong everybody was on that name. So, they always say stocks can go higher than you think and they can go lower than you think too. So when you look at some of these names, oh yeah, well, it's off 50%. Who says it can't go off 70, 80, or 90% if the valuations just aren't right, or if it's a truly Ponzi company that'll never make money? Never. Because of their business model or whatever it is. I mean, Peloton's in the news. It goes from $100 billion valuation to $8 billion valuation, and they're still cutting projections. So they lose money on every bike. Everything that they sell, they lose money on. So, I mean, God knows where it could trade. Now, maybe Amazon or somebody will buy them out, but that's besides the point. So, anyways, let's wrap it up there. Hope you found the info useful. Let's find out today whether we were in dead cat bounce mode or they can push it higher with a rally over the next couple of days. And please, again, go to the blog site this morning. There's going to be a lot of information there that I couldn't get to in the video that I think you'll find informative and give you some perspective on your trading this week. So this has been Chris Buss with Trader's Profit Compass. Talk to you next time.